London, Toronto and NYSE American-listed Caledonia Mining operates the blanket gold mine in Zimbabwe. In the fourth quarter of last year, it produced 14,900 ounces and 54,500 ounces for the full year. It says it's targeting between 53 to 56,000 ounces of gold this year. But this annual target's expected to rise to 80,000 ounces per year on completion of the central shaft in 2021. That aside, most recently, the Reserve Bank of Zimbabwe has revised the export credit incentive program for gold producers in the country. When this was introduced last year, it increased earnings by some 30% at Caledonia and other gold producers in the country. The Chief Financial Officer is Mark Learmonth. He joins us now. Like other members of the board, he's a shareholder in the company. In fact, he's just increased his shares as well, along with the CEO. Mark, good to talk to you again. I'll get on to shares and so forth in just a minute and what all this means in the context of the potential rise in production. But I want to begin, first of all, with this export credit incentive, because this clearly has an impact on earnings at the company. How do you view it?
Well, the export incentive credit's been a program, as you say, run by the Reserve Bank of Zimbabwe for several years now. And it's purely there to, or it was purely there to encourage exporters to increase their exporting activity. Since 2009, Zimbabwe hasn't had its own currency. As you remember, they had the Zim dollar and they broke that. So now they can only rely, they can't borrow any money, they can't print any money. So the only way they can earn money is by exporting. And so it was actually a creative attempt, I think, on the part of the Zimbabwe authorities to encourage gold producers to produce more gold, export more gold. Also applied to other raw material producers and to tobacco producers as well. Now, it started off relatively small. So for the larger gold producers like us, it was initially 2.5% of your revenues. Last year, as you said, it increased from 2.5% to 10%. And then a week ago, they announced a brand new monetary policy statement, as part of which the export incentive credit appears to have, well, it has now gone. And it's got to be said, it was a matter of government policy. It was always somewhat difficult to explain to shareholders in the real world that if the gold price was $1,300, you were going to get an extra $130 an ounce on top. And I've got to say, with the policy was put in place with the best of intentions, but it did create all sorts of opportunities for illicit activity. And so what I think people are effectively doing is importing gold in some form or other into Zimbabwe, selling it to the Reserve Bank at a premium, and then taking the money back out of the country. So instead of actually stimulating sort of foreign exchange reserves, I think it was probably a drain on foreign exchange reserves. So yep, it disappeared in a monetary policy last week. The effect is pretty much immediate, and it will have an adverse effect on our earnings for this year.
But part of this, I guess, is the fact you're now selling to the government, aren't you?
Well, we've been selling to government for many years.
But to the exclusion of exporting yourself.
Yeah, they export for us.
So, that's taken that level of complication out of the equation.
Absolutely,
presumably.
absolutely. I mean, people, let's be clear about this. People were initially somewhat nervous about the fact we were selling to government, because don't forget, in 2008, 2009, government wasn't paying us, and so we think we were the last gold producer that sort of fell into this policy of selling to government, and it's worked very well for us. We deliver on a Monday, we get paid, we get a price fixed on a Tuesday, and we get paid very quickly after that. Previously, when we were exporting ourselves, we'd have to ship the gold ourselves, insure it ourselves. To the extent there was any contaminants in the gold, sometimes a gold bar might take weeks, sometimes nearly months to get processed. So it's actually improved our cash flow quite significantly. So selling to government's not been a problem for us at all.
Okay, so now what are you doing as a company now to try and get yourself back onto a keel that I guess was around this time last year, because before the credit incentive policy was introduced initially, you're back to where you were this time last year.
There was always a temporary phenomenon which had become somewhat bigger in our lives as the rate of the export incentive credit increased. We don't absolutely need it for the business. It was nice to have it. We are continuing to. It doesn't affect our investment plans for the year, which
that's what I was going to get onto, actually, whether or not it does disturb that.
No, it doesn't at all. And critically, Zimbabwe is now moving towards being a two-currency environment. And this elimination of the exporter credit incentive, we think, is part of a broader policy to introduce a proper floating local currency unit. The export incentive credit was paid in local currency. The squeeze on people like ourselves isn't so much local currency. We've got no shortage of local currency. It's the ability to access foreign exchange for export. And the export incentive credit had nothing to do with that at all.
Yeah. Does it disturb your dividends? No. You're paying to shareholders? No. So shareholders are happy in that respect. Let's take a look at the share price, because clearly it has disrupted the share price. You can see it's the most recent leg down here on the far right-hand side of this daily chart here. This is the settlement at the end of every day. It's seen a little bit of an uptick today, but clearly this is of interest to investors. What about the rest of the company? You're still very cash generative, aren't you? You're getting, what was this, 14
we make about $25 million a year at the mine level. Yeah. Currently, for the last 4 or 5 years, we've been investing about 20 million a year. We're now at the end stages of that investment program. So for the last 5 years, since early 2015, we've been sinking a new shaft called the central shaft. It's a 6-meter diameter shaft. It's going down to 1.2 kilometers. We've got 60 meters left to go. So that will be done by the middle of this year, and then another year to equip it, to put all the infrastructure in place. After that, that does a couple of things. First of all, it allows us to increase production from about the low 50s to about 80,000 ounces, and it means our capex diminishes enormously. Our sustaining capex is only about $5 million. So, and our marginal cost per ounce is a couple of $100. So as you increase production from the low 50s to 80,000, you increase profit and cash flow, and at the same time you reduce your capex. So that creates a delta, a wedge of surplus cash, which will be available for either distribution to shareholders and/or reinvestment. And
the government's happy to mop up this extra gold that you're expecting to produce come 2021 plus?
More than happy to take our gold. Yeah. Well, they don't take it; they buy it.
Right.
More than happy to accept our gold.
Okay. So that brings.
Actually, let's be very clear. Government has been very, very supportive of us doing this project. We're probably the only Zimbabwean gold producer that has that's been investing consistently and significantly over the last 5 years. We've increased employment, we've increased production, we pay our taxes, we pay our workers, and the government can see the benefit of this project, and they've been very supportive.
I just want to go back as well, and on behalf of shareholders, ask in the context of the share price, you're not going to go to them for any extra money to complete this hole?
We don't need extra money for this hole. If something else came along for which we might need money, we'd look at it, but at this stage, we've got no intention of raising any money at all.
And of course, anybody that follows the stock knows that you're looking out there for other acquisitions.
Oh, we've been very frank about that, yeah.
And of course, when you get this extra cash coming in 2 or 3 years' time, of course, it means you can presumably look further afield. Is that your intention to look outside the country? You're just interested in Zimbabwe?
Can we be clear? All this talk about acquisitions, let's be absolutely clear. We are not intending to do a big blowout acquisition. A lot of Zimbabwe has been very much a fallow ground in terms of exploration and mining activity, certainly in the gold space for the last 30, 40 years. So there are many, many opportunities which have enormous potential in terms of potential resource base and potential production, but their immediate capital requirements are laughable. Tiny, perhaps $1 million here, $1 million there. So we're not talking about going out and blowing tens of millions of dollars. We're talking about looking at brownfield opportunities, which require probably the first 18 months or so, some desktop evaluations of the geological information that's there. Then after that, some more drilling work. After that, feasibility studies. By the time you're through that process, we'll be in the position where central shaft is finished, and it will be generating significant surplus cash. So what we're doing now is we're now looking over the immediate horizon of 2021 for things that we can usefully reinvest some of the surplus cash that's generated in 2021 onwards for growth. So we're not talking about massively dilutive, big-ticket acquisitions which will dilute shareholders to kingdom come. That's not what we're about.
Okay. Within the last couple of years, of course, politics has changed a little bit. Certainly the leadership has shifted, using your words just now, quite a lot. Explain how things have changed. If they have changed to the positive effect of companies like yourselves?
Very much so, but I think from the outside it may be difficult to see. So ZANU-PF is still the ruling party, but the personnel at the top have changed very significantly. So whereas Robert Mugabe was an ideologue who was driven by political ideas and whatever, the new president, Mnangagwa, is absolutely focused on stimulating commercial growth. We have frequent engagements with him directly, with the Minister of Mines, who actually also used to be a miner, used to run one of Zimbabwe's larger platinum mines, I believe. We have engagement with the Governor of the Reserve Bank, and they're all absolutely focused on stimulating commercial activity. They know the only way to get that country out of the mess it's in is by stimulating commercial growth, and we find them very open to sensible commercial dialogue in a way we would never have dreamt of having those discussions, say 2 or 3 years ago. So very, very significant change. But from the outside, you can see that looking in, it's still ZANU-PF. And all I'd say is that the changes that happened in China and the changes that happened in Russia over the course of the last sort of 30, 40 years were delivered by the same party. It didn't require a sort of a Western-style change in government. So I think there's still some way to go, still a long way to go, but we are cautiously optimistic that there's been a very significant change in the way that Zimbabwe is running itself.
Yeah. Just very briefly, going back to this central shaft and your completion, you say at the back end of June, July time, is it?
The digging will be finished by the end of probably mid-year, June this year, and then there's the equipping. That takes another year, and also costs.
Any news headlines we're expecting out of that we should watch out for?
I think we'll say when we've stopped digging. I think we'll put a big announcement saying we've stopped digging the shaft and we've started equipping.
Yeah, look, we'll wish you all the best there, and thanks indeed for dropping by. Mark, it's good to talk to you again. Mark Learmonth is the Chief Financial Officer of Caledonia Mining.